All right, as you see what's going on, so we have a master pattern and we're starting to expand outside the master pattern. This is probably the first wave expansion from the master pattern. So what we're looking to do, we're not trying to be like an average trader. They're just basic technical analysis, patterns, etc., etc. So what we want to do is we want the odds to favor us. So since the institutions are going to manipulate this market right now, what we're going to look for is a break away from the contraction area. So if this price drops down, breaks the low of the day, bounces off the 200 on our 2-minute chart, we'll go back up with it, because then we're starting to get into a multi-phase expansion. So we go from contraction back into expansion. That's the master pattern. So there's very few people in this market that actually know what to do and how to do it and stuff like that. Most of them teach patterns and sell software and stuff like that. But that's not the end all, the be all. These patterns have value to them, but you have to understand how they work, when they don't work. And then software is just a byproduct of price itself. So when you learn how to read your charts, you'll know how to do this correctly. So again, you see how we're coming down to the low of the day. If we drop through the low of the day and go to the 200, we're going to look to get in. All right, so just watch. What was that again? If the price drops down to 200. No, well, anywhere around that 200 on our 2-minute chart. So I would prefer if the price drops through it and we get in underneath it. So at least if it gets back on top of it, we can use that as a protective barrier. Now, if it just hits it hard and kind of flutters around, we'll give it a little bit more time. But if it punches through that 200, I don't think it's going to go much farther past it. So I'd like to get underneath that 200. You see what I'm saying?
Order filled.
Good morning, everyone. Today is Thursday, December 5th, 2024, and we're going up with QQQ. H pattern, H pattern, H pattern moving average bounce, H pattern close enough slingshot, H pattern close enough moving average bounce, H pattern. All right, ladies and gentlemen, let me point out something. So we had contraction, we broke out on expansion. So we broke down. I believe we're going to go back up based on the statistical probability of the master pattern. So as long as we can get above fair market value, this is where I expect the price to go to eventually. Fair market value right now is between 522.75 and 523. If we can stabilize around the 522.50 area, the big institutions are going to accumulate positions, and what we want to see is the price to pass through fair market value and clear it. So right around our dollar mark, maybe a little bit beyond. Now it might go the full way. That would be a very strong move, which may or may not happen. But if we get all the way back up to the 523.25 with some speed and violence, then we might pull back and come back into fair market value. Again, the 522.75, 523 area, and then we might go all the way to the high of the day. So depending on how long it takes to get our dollar and a little bit beyond will dictate whether we're going to stick around. Again, based on the master pattern in and of itself, the odds lie to the high side. We broke down first, so that means that all we have to do is get past fair market value, retrace onto fair market value if that's the case, and then we'll go to the high of the day. If not, we'll watch the institutions accumulate a lot of orders in the 522.50 area and then push the market back up.
Horizontal line triggered on symbol QQQ.
And there's a $1 move, ladies and gentlemen. What we're going to do is we're going to lock in half of our gains, and we're going to stick around for a few more moments to see if we can punch through the 523.25 to the 523.50 area. If not, most likely this will push up a little bit higher. It'll fail, come back down to fair market value. Again, just remember that key level is going to be 525.75, 523-ish area, and then it might go right back up to the high of the day at that point. So So depending on what the next couple moments gives us, we'll either decide to take our money and run and then reposition ourselves, wait until we come back into fair market value, and then go back up with the market. So again, we're going to play this bar by bar, but we're not going to stick around too long. If we start to fail getting past the 523.25 area, we'll just take our money and run. Our TSL1 on our 2-minute chart is pretty much maxed out, so we're going to pull our profits right.
Order filled.
And there's $1.15 on this run today, ladies and gentlemen. Again, what we're going to do is we're going to position ourselves to re-enter going back up with the market around fair market value, and that might take some time. But as far as this move to the upside is concerned, I think it's exhausted, and we'll have to come back here, back to the moving average areas. So until next time, ladies and gentlemen, never forget, be a pro.